We have a great show for you today. We're talking Jackson Hole, gold's parabolic rise, and will silver follow suit? And of course, those numbers coming out of India, the World Gold Council reporting that gold imports in the country will reach 1,000 tons this year. How valid are those figures? Joining me to talk about all this is Puru Saxena of Puru Saxena Wealth Management. He joins me all the way from Hong Kong. Puru, always nice to see you.
My pleasure.
All right, Puru, let's talk about the FED. Is Bernanke likely to announce a QE3 this Friday?
I'm not so sure whether Jackson Hole will be the day he unleashes QE3. A lot of people think that there is not enough pain yet. However, when I look at the bank stocks in America, Daniela, especially Bank of America, Goldman Sachs, all the big ones, they are down significantly from the highs. And that leads me to believe that Mr. Bernanke will do something to help his brothers in the banking industry. He runs the Federal Reserve for the benefit of the banks, and the Federal Reserve is run by the banks for the banks, and he's not just going to sit by and let these banks implode. I'm sure that these banks need capital, and the easiest way for them to get some capital is through the Federal Reserve. So I wouldn't be surprised if the Fed announces some sort of asset buying program here. They may not call it QE3, they could call it Operation Twist or Black Storm or whatever else he wants to call it. But at some point, there will be assistance from the Federal Reserve.
And in turn, this would create a bullish gold scenario?
Absolutely. If you look at the uncertainty in the world today, and if you look at the monetary system, and you look at the strain on the banking system, whether you get inflation or you get deflation or any sort of mayhem in the monetary system, gold tends to do very well. Gold is not just an inflation hedge. Gold does well during times of turmoil and uncertainty, and I can assure you there is plenty of those around in the world today.
But with gold at these highs, Peru, how likely is it that we would see a correction of $100, $200? What are your thoughts?
Well, if I look at what silver did last year, Daniela, it went parabolic. And if you look at the advance of gold over the last 10 years, it has been a very orderly advance. We didn't really have any massive spikes. However, about 2 or 3 months ago, I felt that gold was about to do its thing this year, considering silver did its thing last year. And now we've seen a breakaway move from that orderly uptrend. And I think gold is now going parabolic. If you look at the advances have appreciated, the magnitude of the advances has appreciated. Gold's now moving 3-4%. The consolidations are getting smaller, the corrections are getting smaller. So I think we could be on the cusp of a massive upleg in gold. I wouldn't try and be too clever by timing gold here or trading gold. I think the correct thing to do in a bull market, especially in the latter stages of a bull market, is to take a sizable position and simply ride it out for the duration of the bull market, or at least ride it out to all the way to maybe within the last 10 or 15 or 20% of the entire move. And I think we would be on the verge of a big rally over the next 6 to 9 months in gold as well as silver.
But when you say big rally, Peru, what kind of numbers are we looking at?
Well, it's very difficult to give you exact numbers, especially over the next 3 to 6 months. But I will say this, Daniela, before the bull market in gold is over, I expect 1 or perhaps 2 ounces of gold to buy the level of the Dow Jones Industrial Average. At the moment, the Dow to gold ratio is 5.7. I think before the end of this boom, we are going to see 1-to-1 or perhaps 2-to-1. I'm inclined to think we're going to see 1-to-1. 1 ounce of gold will be enough to buy the level of the Dow. So you have to watch that very carefully. And the second thing people need to bear in mind is that relationship between the amount of gold held in American reserves with the M1 or the monetary base. Now, the M1 today is about $2 trillion. It was about $400 billion in 1980. So the M1 or the monetary base in the US has increased by 500% over the last 31 years. And if you look at the official gold reserves in America, you're talking about 8,133 tons, which equates to roughly 261 million ounces. So if the market forces the gold standard upon the policymakers, the value of the American gold stock would be revalued to compensate or offset the M1 or the monetary base in the US, and that will give us a gold price of about $7,400 per ounce. I'm not saying that this is going to happen, this is not a forecast, but this is what has occurred in the previous 2 bull markets. In 1980, the value of the American gold stock was greater than M1, and the same thing occurred in the late 1930s. So if history is any guide, we can expect this outcome this time around, but again, this is not a prediction.
Puru, you touched upon silver, and many have written to me asking, why has silver not followed in gold's footsteps? Why has it not gone parabolic? But you anticipate a rally here as well.
I do. Silver has been in a massive uptrend for the last year. If you recall, Daniela, last time we spoke in April, I think it was, early May, I was warning about a big correction in silver. I got a lot of hate mail back then because everybody thought silver was going to 400 or 500. But when I looked at the charts back then, it looked very overextended. It fell to the low 30s. We started buying silver for our investors at 33, 34. We've added some more last week. We've bought some more yesterday. So I think silver has now completed its consolidation phase. It's now recently broken out to a new recovery high after the big sell-off. And the technicals for silver look super here. If and when Mr. Bernanke does QE3, silver is going to ignite. And at the moment, roughly 15% of the assets which we manage are allocated to physical silver. So we are positioned to benefit from that.
All right, for our last topic, Peru, the World Gold Council came out this week stating that Indian gold imports may reach 1,000 tons this year. But how accurate are these numbers? Have you heard anything?
Well, demand for gold is going up all over the world. India has also been buying more gold. I think jewelry demand is down, as the World Gold Council reported recently. However, that is being more than offset, Daniela, by investment demand. People all over the world are shunning paper currencies. They are really concerned and worried about the reckless money printing going on all over the world. And people are seeking refuge or shelter in gold. So I think this bull market in gold is not just about Indian jewelry demand or Indian investment demand. This is about global investment demand. Investors are piling into precious metals and gold, not only from India, but from China, from the Middle East, from Latin America. And it's not just retail investors, big hedge fund managers are buying into gold. Even central banks are beginning to see the light of the day. Even Korea, Mexico, Thailand, they've been piling gold. And I think the big player amongst all of this is the Chinese central bank, because China, as you know, only owns about 2% of its reserves in gold. At some point, the Chinese are going to buy gold in large quantities, and I wouldn't be surprised if the Chinese have secretly been piling into gold as well. I think every investor in the current environment should have a large portion of their assets in physical gold as an insurance policy against a system which is now broken down. It has fallen apart. The modern day banking system is now over, kaput, finito, as far as I'm concerned. And the leverage in Europe is just insane. If you look at the balance sheets of some of these banks, Daniela, they're leveraged 30 to 1, 40 to 1. And I'm convinced that within the next couple of years, you're going to see at least one or two sovereign defaults. The Europeans may bail out the Greeks because Greece is a small economy. But when you're looking at Italy, Italy is 2/3 the size of Germany, 1.5 trillion euros of GDP, 1.9 trillion euros of debt. I don't think the Germans or the French are going to pick their tabs. So at some point, you're going to see a cascade of bank defaults. And when that happens, you better...
Right, but could the Italians here unload some of their gold?
Well, they can try, but I think there's been a bank run going on in Europe already. And if you see ECB, the ECB started buying Italian bonds and Spanish bonds. And why are they doing that? They're doing that to provide capital to these banks so they can meet the redemptions. And I suspect a lot of Europeans are going to want to get out of those banks and take their savings, maybe in physical gold or across the international borders in some other safer banks, perhaps in Asia. So this is not really a liquidity crisis. This is really a solvency crisis at the very grassroots level. This is a classic banking crisis, which really has no solution. The system is too big, Daniela. The derivatives are now at 600 trillion on an economy which is 60 trillion globally. So the system is just too big. There is no quick fix. You will have to have a painful contraction. The debtors will have to take the pain. The creditors will have to take the pain. There will have to be debt restructuring and huge amounts of defaults. This problem can't be papered over.
All right, Puru, that's unfortunately all the time we have for today. Thank you so much for joining me.
My pleasure.
But who knows, next time we speak where gold will be headed.
Oh, we'll see what happens.
Thank you for watching Kitco News. You can email me at newsfeedback@kitco.com. We'll see you next time.